In this presentation, we will continue on with our comprehensive proprietorship problem, this time focusing in on the statement of owner's equity. For more accounting information and accounting courses, visit our website at accountinginstruction.info. You'll recall up to this point we have done the balance sheet and then we have done the income statement, finding a home for the assets and the liabilities, finding a home for the net income, which is revenue minus expenses. The only things we haven't found an individual home for being the equity section. Now remember that we did the balance sheet first and we're in balance, assets equal liabilities plus equity. Then we decided that this number is correct, but it represents all blue numbers. So we need to find another home for these numbers. That's what the income statement and statement of equities are. In other words, once we do those two statements, we will come to a amount of $103,600, hopefully. We've done the income statement, which is going to be this portion of recalculating all the blue numbers. Now we just need to add that income statement portion to the other two components, the equity components, the capital and draws, and we should then be able to reconstruct this $103,600, that number, of course, being all the blue numbers, 103,600. So in order to do that, I'm just going to hide some cells here so that we can see the statement of equity right next to what we're using to build it, right next to the trial balance. So to do that, we're going to put our cursor on G column. So you see the drop down like an arrow, and then left click on it, and we're going to slide over or move over to column M, and then let go. Then put our cursor on that selected area, right click, and hide. So now if we go back to the right a bit, we've got our statement of equity right next to the stuff we were trying to use to build it. It would kind of be nice if it was a little lower here, but that's okay. That's okay, that'll work. So the statement of equity, what we're gonna do is we're gonna start with our capital account. Now remember, the equity section really on the balance sheet was just capital, that's it. That's gonna be our ending number. We're trying to get to ending capital. So we're going to start with beginning capital. This is a timing statement. It's similar to the income statement, meaning it deals with timing. It's saying for the month ended, we have to have a beginning and an end. But this time we're not starting from zero. We're not, unlike the income statement where all income statement accounts were zero at the beginning, like resetting a stopwatch. This time we're starting with wherever we were at the beginning, the book value of the company, the assets minus the liabilities of the company at the beginning of the time period. And then we're going to subtract, and then we're going to tell what happened, the activity. So in this case, the beginning sometimes is represented by this capital account number because this capital account number represents the beginning balance plus any investments typically. In our case, it was a new business, and therefore we had no beginning balance. Nothing happened in the prior period. We had no value that's rolling over from the entire period. That entire 100,000, in other words, was an initial investment by the owner. So our beginning balance is nothing from the trial balance, it's just zero. But just note that, again, if it was month 2, then this would typically be the beginning balance because it wouldn't represent investments. Hopefully the owner had already invested money and typically is not investing more month to month, but instead is taking money out in the form of draws, and this number would be whatever was in there in the prior month. In order to check that, of course, we can go to the general ledger. So just to give you an example, if I wasn't sure if that was the prior balance or not, I can go to the GL, which is going to be on this tab, and we're really looking for this balance here. And if we go to the GL for that, here's the general ledger, we'd say, okay, it started at 0 at the beginning of the month, and then we had this activity which was an investment that happened. If this was month 2, we wouldn't start at 0. We would start at whatever we had last time. Because this is the beginning, our first transaction, this came from the initial investment that we had. So this is an investment not from the beginning of the month. Okay, back to the financial statement tab. So then we're going to say that we're going to increase it by investments, which is going to be this number. So that number, it will either be investments or beginning balance or some combination of both. I want to flip the sign here. So instead of putting equals, I'm going to say negative of that number and enter. And then we're going to put the activity that happened. That's our timing statement. That's all these accounts. But instead of putting them all in there, we're just going to lump them together with net income. This number could be found on the income statement. We'll equal the income statement. We're going to pull it from here. So to do that, I'm going to flip the sign again. I'm in 06. I'm going to say negative of that number and enter. So there we have that. And then the one account we haven't found a home for, we found a home for here now, is draws. So draws is the last account we're going to have. We're not just going to call it draws. We're going to tell our reader once again it's a subtraction problem with the word less. And note, we didn't put the word less on the income statement, and sometimes we do and sometimes we don't. Here we're going to say it's less common enough, people don't know enough to know that they subtract draws here as they do in the income statement, subtracting revenue minus expenses. Therefore, we're going to put it as an indication with the word less. And we could put a negative sign here as well, but I'm not going to do that here. I'm just going to put that with the words. And so we are in 07. We're just going to say equals that 1,500 and enter. Now I'm going to put the subcategory just on the right-hand side, subcategorying the activity. We're now going to give the subcategory of the activity that happens. I'm going to pull this to the right-hand side, and I'm going to call it just increase. Now this is really kind of the net increase that we have here, because it's the increase and the decrease. Some statements will pull out just the increase and the decrease. We're going to put the subcategory over here and just call it the increase. This is going to be the activity that happened. Now we're going to do this incorrectly first, and then we'll see if you can spot the error, and then we'll troubleshoot the error that happens, common error that happens. Okay, so we're going to use the sum function. We're over here in P8. We're going to say equals SUM, double click the sum function, and highlight the activity, and enter. And then we're going to have the capital account at the end of the time period, which is where we're going to end at. Notice these are much the same, only difference being January 1st, the beginning of our time period, and the end of our time period. To think of this in a generic fashion, you can just think of it's going to be the capital account at the beginning of whatever time period we're doing, and the capital account at the end of whatever time period we are covering. In this case, January, therefore January 1st, start, January 31st, end. We're going to have our ending number here then, which here is just going to be that 106,600, because of course there was no beginning balance. So it's really 0 plus the 106,600. If it was any month other than the first one, there would be some balance here. That number represented on the trial balance probably by this number, or a combination of that number. In other words, this number could indicate both an investment and prior period capital that we would have to break out. So I'm going to do this with the sum function, equals the sum of the 0 and the 106.6. Just the outer columns. Now we're not jumping from column to column. Now if we double check that number to see if it's correct, we can say, well, it should add up to these numbers, the 103,600. This number also being what was on the balance sheet, which we are recreating. And that doesn't match up to what we have here, 106,600. The difference, if we pull out the calculator, 106,600 minus the 103,600 is 3,000. I'm going to divide that by 2 because maybe it's just a sign issue. Maybe we added when we should have subtracted. Let's divide by 2. Common error to do that. 1,500 looks like our draws amount. And of course that's what happened. We summed this up, and that's not the calculator. It says less here. We should subtract there. So it should be the 100 plus the 1,005 minus the draws, which makes sense because the draws you can see is a contra equity account, meaning equity accounts are going to win with credits. The credits are winning by 103,600. The draws are debit, bringing the credit down or making the credits win by less, meaning we have to subtract it. So we're going to do this with a little formula here. Instead of doing this, we could say equals this number plus this number minus this number. That's one way to do it. Now if you want, and that'll be right now we're at the 103,600, which matches the sum of these 103,600. Now if you want to make that look a little bit more fancy, just to, if you're turning this into someone and you want to make a nicer looking formula, it does the same thing. You could say equals the sum of these two numbers, close it up, and then minus this number. So if you're trying to be a little bit more impressive or whatever and use the sum function, this might be a more sophisticated looking formula. So there you have that. In any case, they both work. So now we found a home for all of these. And so let's just check if this financial statement is doing what we think. I'm going to unhide these cells. I'm going to put our cursor on E with the drop down. Left click, highlight to N. As long as we're covering over these hidden cells, which we know is hidden because it says D, E, F, N, and it doesn't go right. So we're going to right click on it and unhide. And there we have it. Now, if we just double check our numbers now, the yellow numbers are here to indicate where the financial statement should tie out. We should be able to check everything off. So obviously the first check, assets do equal liabilities plus equity. Good, check. And then the capital account should represent what is on total equity now. So in other words, this number should be the same as this number. What we calculated it from is taking it from the total here, which should be the same. If we want to tie it out on the financials with a formula, we could now just say that this is going to be the same as this number. So that's that. And then if we go down to the income statement, net income on the income statement is part of that calculation for equity. It's this number. I should make that yellow. And again, we got this number from our trial balance, this number, revenue minus expenses. If we want to indicate it just coming from our income statement to tie it out there, we could say this equals this number on the income statement. Again, as long as they're numerically correct, then they're correct, but just however we want to format it. And then of course this number is here. So everything ties out, and we found a home for everything. So note, we found a home for all of these numbers, assets and liabilities, separately on the balance sheet. We found a home for all of these numbers as one number on the balance sheet, but then found a separate home for them, finding it on the income statement accounts for revenue and expenses on the income statement, and then breaking out these two, finding a separate home for them on the statement of equities. Once we have done so, our balance sheet's in balance, our double entry accounting represented by the balance sheet is in balance, and we have recreated the equity number here on the balance sheet as of a point in time, as of the end of our time period, by creating the timing statements of the income statement and the net income and the statement of equity, resulting in that same 103,600 telling us the story about the net value of our company, about the asset minus liability value of the company or business or sole proprietorship. For more accounting information and accounting courses, visit our website at accountinginstruction.info.